Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set the agenda.
Failure to impress cost big tech. Tesla points another disappointing quarter, from deliveries to delays on robo-taxis. Alphabet adds fuel to the equity sell-off. AI underwhelms and overshadows a revenue beat. And VP Harris attacks Republican nominee Trump in her first campaign rally. Trump says that he is willing to take on Harris in a debate. Good morning, Manus.
Danny, good morning. Underwhelm at your peril. Quite literally, the slaughterhouse is open. If you underdeliver, there will be a chop against your stock. Think UPS right the way through to Tesla, down 7% and change this morning. This is where we are, 6.83%. It has been a little bit more virulent than that. So the bears are getting everything that they wanted. If not so much that it's a terrible result, it's just there are delays, underwhelming margins in Tesla. We'll talk more about that in just a moment. NVIDIA, Elon says he's doubling down on his Dojo supercomputer. Again, taking another little bit of a chunk out of NVIDIA. You don't need many reasons to take some heat out of this market. The Mag 7 trails the Russell by 5% over the past 2 weeks. We're going to catch up with Julian Emanuel. He says the correction has already begun in time and price. But what is going on in the bond markets? You've got this pressure on the tech side moving into the Russell. Is that a real manifestation? What's happening in the bond market? Well, you had the Richmond Fed, the lowest since 2020. Existing home sales down 5%. And the two-year auction went pretty fine yesterday. You've got fives coming down the pike today in 70 billion. So again, the cracks and the fissures in the economy are becoming more apparent. Dollar yen. I like putting dollar yen on the board because it's strengthening for the third day. You've added almost nearly 2% to yen strength. Is this a manifestation of the carry trade being unwound rather than a deep-seated fear of what happens next from the Bank of Japan? Danny, good morning. There's lots of guts and gore, isn't it, this morning?
So violent this morning, Manus. Jeez, I guess for a bear, it is a violent morning for you. I know Tesla's falling more pre-market, but I think Alphabet's miss is more telling because things like advertising, all of that did fine. It was their AI search feature which didn't show up, and that's going to be the problem for big tech because they've been spending so much money. If they can't show up with AI results, the market clearly is punishing that and just adding to this rotation we've been getting.
But I think this is where, I mean, we both said it, the bar, where is the bar to profitability in Mag 7? It's not that the profits are collapsing, it's just that the expectations, the estimates are so high. And it goes back to what Amy Wu Silverman said to us yesterday, glasses on, glasses off. It's one of those days. This is what, you know, this is what happens when you get older. The last earnings season, the pivot was for FOMO and MOMO. In other words, we're bidding up the calls like Billio, and here we are. The manifestation is coming true. It's the fear and loathing of the downside.
Well, Goldman already before this earnings season said big tech is spending too much. They are spending too much in AI, and they themselves said it's not so clear that that's going to show up in the results. And again, Alphabet lays out that it doesn't show up, at least for now. But how patient are investors willing to be when we've been hitting record after record in this equity market? This
is going to take delivery from imagination on AI to actual revenue generation. So we started the day with stocks. There's an interesting one, but never too far from politics. Look, the Vice President, Kamala Harris, officially launched her bid for the White House in the swing state of Wisconsin. Harris attacked Republican nominee Trump, referencing her past work as a public prosecutor.
In those roles, I took on perpetrators of all kinds. Predators who abused women, fraudsters who ripped off consumers, cheaters who broke the rules for their own gain. So hear me when I say, I know Donald Trump's type.
So she's full in on prosecutor versus felon. Meantime, Donald Trump's campaign, they filed a complaint with a federal agency claiming the transfer of Biden's $96 million campaign war chest to Harris violates the law. Trump's lawyer referred to the move as a brazen money grab and the biggest violation in the history of Federal Election Campaign Act. Vonnie Quinn is with us in Washington. Vonnie, so this is the Trump response. It's about the money. But if we stand back and we look at her first appearance, this is the first appearance on the campaign trail. She really is laying out her desire to go hard and heavy on the character of the former president.
Absolutely, Manus, and testing out those lines that are working right now. We're going to hear that line over and over again about the predator, cheater, fraudster. It goes down really, really well because it's funny. It shows her human side, but it also, as you say, points to her prosecutorial side and the fact that she is not afraid to prosecute, even on the campaign trail, and reminding people as well that Donald Trump is a felon and has been impeached twice. You can tell that the Trump campaign and Donald Trump himself are bristling because we had many developments today, not just that complaint that was filed with the FEC, but also Donald Trump holding a call with reporters, which is something he never does. He held a call with reporters, took questions and said he'd be quite happy to debate Kamala Harris. He would actually be fine with debating her several times between now and the election date. That complaint, by the way, it's a little bit spurious. It's been filed. We'll see what the response will be. But that $96 million was raised for the ticket. And technically, Kamala Harris can use it without any problems. And, she's raised so much money and has got so many donations, from big to tiny money donations so far, that even if she couldn't access that money, I'm not sure it would be that much of a problem.
Well, Harris goes to Wisconsin. We see Prime Minister of Israel, Netanyahu, coming to Washington. Usually that would take up all of the political oxygen. Vonnie, this time it is not. It is overshadowed by the race. We know that Harris isn't meeting with Netanyahu while Trump is. What do we make of the differences there?
Well, so Harris is actually going to Indiana and Texas on Wednesday to campaign. If there is a spot where she can meet Netanyahu, I believe they are going to try and make it happen. We do know that Netanyahu is giving a joint address to Congress, and there is a heightened police security in Washington, D.C. because of that. Lots of protests ongoing around Capitol Hill. Then on Thursday, he does meet President Biden, who will be back at the White House. He is addressing the nation tomorrow night, Wednesday night at 8 p.m. Eastern, the first time we'll have seen him properly since he went into isolation for COVID-19. And then Netanyahu goes to Mar-a-Lago Friday to meet Donald Trump. This is what Trump posted on X in the Tuesday day. And it's important because we don't really know how President Trump, if he were to be re-elected, would handle the Israel war on Hamas. We know that they were great allies, Netanyahu and Trump, when Trump was president originally, but that Trump was furious with Netanyahu for congratulating Biden when he won in 2020, and that he has also, told Bibi to finish up this war. Biden, for his part, wants that ceasefire. We'll see if he gets it. Every time he says it's imminent, it hasn't come to fruition.
Yeah, Biden has really said he's concentrating the rest of his presidency on that foreign policy. Vonnie, thank you so much. Bloomberg's Vonnie Quinn waking up early for us, or staying up very late, rather, in Washington, D.C. Joining us now is Lindsay Newman, head of global macro-geopolitics at Eurasia Group. Lindsay, you write that for the U.S. political system, this level of uncertainty is unprecedented. Just given over the past few days of what we've heard from Harris, either be it her decisions on foreign policy with Netanyahu, not meeting with him, her speeches, do you have any more certainty on what a potential Harris presidency might look like?
This has been really a storybook start for Vice President Harris. She could not have written up better. If we think about just a couple of days ago, it was great uncertainty about whether she would even face any other competitors in the replacement for President Biden. And here she is. She's now secured all the pledged delegates that she needs to begin the nomination process. We expect that to begin virtually next week. As Vonnie was just laying out, she has brought the news of her selection has brought historic rates of money in through the door over in the last 48 hours. Her messaging appears to be popular. The prosecutor versus the perp, the fight for the future, but also irreverent. There is a belief, really, that she could potentially expand the Democratic coalition, expand the umbrella of voters in a way that Biden it was not perceived that he was going to be able to deliver an expanded umbrella of voters for November. So Democrats really have momentum here. And the question of what kind of president she would be, what would her policy be, it is, in a sense, a black box, particularly around foreign policy issues. We have to think this would be mostly a policy continuity story, including around Europe relationship, transatlantic relationship, NATO, the U.S. approach to Ukraine. But all very importantly, there is this perceived bit of daylight on Israel, on Israel in terms of Biden versus Harris's policy on Israel or approach to Israel. And we know this is overhanging with Prime Minister Netanyahu's visit this week.
Lindsay, good morning. Yeah, Kamala Harris made 17 trips abroad as vice president. None of those were to Israel. Tell me this, there's a great phrase in British politics, what cuts through? Kamala Harris is going to spend a lot of time in the swing states. We know that. The halo effect will dissipate, and that's what we've been saying for a couple of days in terms of the shine, the money rolling in, etc. So when we stand back, what is she going to focus on in those swing states to take her over the line?
President Biden had difficulty navigating this dynamic between the centrist part of the party and the progressive part of the party. Kamala Harris has stepped in and seemingly has animated the base in such a way that she's bringing in additional demographics, additional components. The progressives are animated by her. AOC has thrown her support by her. So she can sort of, in a sense, sidestep this tension that Biden just could not break free from. And if she's able to do that, that is what will break through. So I completely agree with you. As you say right now, the polling is essentially at a statistical tie between between Trump and Harris. There's this poll overnight that has actually put her ahead of Trump, but that will fade, and we're still in that honeymoon phase of understanding what is going to be her messaging. So far, perpetrator versus the prosecutor, the fight for the future, a lot of the same policy as Biden has. And then, it really is a bit of a ball in Trump's court. How does he react to this new replacement candidate? He doubled down last week at the convention with the JD Vance pick on animating his base. That's what he put all his chips in the table for. How does he respond? And so far what we're seeing is he's trying to drive an election integrity story. He's trying to drive a story about how everybody knew that Biden wasn't fit to serve, including Harris. We have this news overnight of the FEC lawsuit. So that's what we need to be watching for.
And to that point, Lindsay, there's a story in Politico that essentially senior Republican leaders have gathered around and said, stop campaigning on things like race. Stop campaigning on things based on gender. That was after some Republican representatives, Tim Kirchhoff of Tennessee being one of them, calling her the DEI candidate, basically saying that she doesn't deserve it. And Republicans, again, the leadership said, stop doing that. It's a losing argument. What does that show us about the weakness of a Republican ticket where it is Trump and JD Vance in battling someone like Vice President Kamala Harris?
Yeah, Danny, we'll never know if Trump, given the benefit of a couple extra days, would have still picked JD Vance. It felt like JD Vance was his pick. But it does mean, as I said, he's doubled down on what his messaging is, what he's been standing for since he left office. The rigged system, the idea that people are being left out and that it's the Democrats who are actually the threat to democracy. And it's really puts him in a difficult position now to have to pivot and actually potentially have to expand his umbrella in a way that, say, a Nikki Haley VP pick may have enabled him. And that's what he's going to be struggling with over the next couple of weeks and months. And we'll see. That will be, in the postmortem, a very impactful ability for him to actually do that, whether he's able to win in November. We still think that he has the base case scenario that he will win, but the race is tightening.
It is, and then it's going to come down to who she chooses as her vice president pick. And that is going to be the interesting running mate when it comes, and it is coming down to some of those swing state names. Lindsay, thank you so much for joining Danny and I this morning. Lindsay Newman over at Eurasia Group. Other stories trending on your Bloomberg terminal this Wednesday morning. Deutsche Bank shares are plunging this morning, seeing its first quarterly loss in 4 years amid a trading slowdown. The bank booked a charge tied to a legacy issue at its post-bank retail unit. The bank said it will most likely refrain from a second share buyback this year.
Elsewhere in European bank earnings, BNP Paribas, for the first time ever, had equity traders that made more money than their fixed income colleagues. Revenues from that unit jumped 57% in the period, more than making up for the slight decline in bond trading. Even despite that, shares in the French bank are down this morning because of pressure on its retail banking activity.
Elon Musk confirmed Tuesday that he was making some donations to his super PAC supporting Donald Trump's campaign. He acknowledged making donations at a much lower level than the $45 million a month pledge mentioned in previous reports.
Well, coming up, big tech weighs on futures this morning. We're going to take a look at both Tesla and Alphabet's results next on your Bloomberg Brief.
I wanted to make some important changes that I think would improve the vehicle, the sort of the robo-taxi, the main thing that we're going to show And we're also going to show off a couple of other things.
Well, Tesla shares are slumping, as you can see there. The automaker reporting its fourth straight quarter of disappointing profit. Investors now have to wait until October for the debut of the much-waited-for robo-taxi prototype. Craig Trudell is with us this morning. Craig, I don't know where to look across this series of reports. Slippage on timing, slippage on deliveries, slippage on margins. I mean, it was a fairly disappointing narrative given the run higher on the stock. We just didn't get delivery.
Yeah, I think pretty much across the board, the numbers were disappointing. I guess on the revenue side, there was, there was a beat there, but some questions about the sort of staying power of that, because a good portion of that bump had to do with regulatory credits. So selling credits to other car makers struggling to meet emissions requirements, which, may actually be weakened if Trump returns to the White House. That is, one aspect of Trump's policies that didn't get touched on. There were other elements that were covered on the call, from subsidies to whether or not Tesla ought to be investing in Mexico. And it was pretty remarkable that, for a CEO who has so publicly come out, getting behind, former President Donald Trump, having to kind of answer for the idea that there are a few ways in which him returning to the White House would potentially hurt Tesla.
Well, there's this irony that in Craig, and also, having an Elon Musk who went to China to try to get wins from the Chinese government, and having a Trump administration, or let's be honest, any administration, be very tough on China. Is there some element of having an Elon Musk that is donating to a Trump campaign, that is speaking to him frequently, that there's this belief that they can somehow be exempt from potential new policies from a Trump presidency?
I think you've seen some analysts ponder whether or not this may have something to do with the fact that Musk is under a lot of regulatory scrutiny. So the Justice Department and SEC have looked into the company's claims about self-driving technology. That's really what Musk has sort of tethered this company's future to. And the fact that they've been selling consumers for years on this idea that eventually their car will be able to, become a robo-taxi at sort of the press of a button or a software update. If the feds were to come after Tesla over not having delivered on that, it would really do a number on this company, given how all in Musk is now on AI and self-driving.
Yep, you feel it. Shares down 7% this morning. Craig, thank you so much. Great to see you. Bloomberg's Craig Trudell. Now, another stock we are watching after it reported earnings is Alphabet after the bell. It did beat on revenue expectations, but the stock down 3% in the pre-market trade. Wall Street clearly not impressed by the lack of results from AI investments. For more, let's get over to Bloomberg's Shauna Ghosh. Shauna, this is the thing that everybody is concentrating on big tech because so much money has been plowed into AI. How soon and how willing are investors to wait for it to show up in the results?
Not very long, clearly, judging by the falling stock pre-market this morning. As you say, we know that the chips required to power these new artificial intelligence services are extremely expensive. Every time you make an AI search on Google or a competitor like ChatGPT, it costs those companies money. That the money is fractional, but if you think about millions, even billions of people doing that, that's a significant expenditure. And yet we're not necessarily seeing the direct revenue translation for these companies. Google at its core remains an ad company. It has tried to do many other things, but predominantly where it makes its money is still advertising. So understandably, investors are trusting in that and want to see a clearer translation between AI expenditure and what we see on the ad revenue side. Now, Google actually did well on sales, but the question is whether it would have done well on sales anyway without some of the new AI features. Actually, Google did roll out some new AI features in May. They didn't do particularly well. People may have read about Google's new AI and search suggesting that people put glue on pizza to make the cheese stick on correctly, and that had been drawn from a joke post on Reddit. So clearly some issues there. So I think TBC we've still got a little while to go before we see AI translating directly into that ad revenue.
Growing pains of AI. I just eat the pizza way too much of it. You're right, 48.
You need glue on pizza, Manus? I'm
No,
worried.
I just eat way too much pepperoni pizza. Charlotte, thank you very much. 48.5 billion in advertising. But of course, as you said, Danny, it is about the capex. That is the issue for these companies. They're spending so much on advertising. So much on investing in R&D. Coming up, we take a look at what else makes your headlines around the world. A little bit of luxury for you. LVMH, not exactly going to plan in China. Front page news, short and sweet. Louis Vuitton has not had the pleasure of Danny Berger enough. I'm being facetious. Stocks at a 6-month low. Organic revenue in fashion and leather way below what they estimated. And China is under pressure. Danny, the sales tanked by 14% there.
The silver lining for them is everybody is going to Japan and buying goods. Their Japanese sales really strong to the point where they said that they're not going to raise prices in Japan because they're worried about the currency fluctuation. So I guess go to Japan is the moral of the story. Buy some LVMH there. From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Failure to impress cost big tech. Tesla posts another disappointing quarter from deliveries to delays on robo-taxis. Alphabet adds fuel to the sell-off as AI underwhelms and overshadows a revenue beat. And VP Harris attacks Republican nominee Trump in her first rally since the launch of her campaign. Trump says he's willing to take on Harris in a debate. Danny, good morning. Underwhelm at your peril.
Underwhelm, and it makes the rotation live another day. But this time, the flavor is different. It is not small caps catching up. It is big tech's disappointment. You lay them both out there, Manus. It is Tesla, and it is Alphabet. The issue this time means that the S&P 500 futures down about 0.8%. We've already fallen 4 out of the past 5 days. That is something that this market, the S&P 500, hasn't done since April. So is there a sentiment shift? Russell 2000 futures, they outperformed. They're still down, but doing better. Down about 1/3%. Barclays says buy on the tech weakness. That still fundamentally there's a good story to tech. So you want to buy on any of these earnings weakness. So they would be buying this dip. Meanwhile, U.S. 2-year yields, they dipped further this morning, about 5.5 basis points, fell about 2.5 basis points yesterday after some kind of tier 2 data, that is housing data, the Richmond Fed's manufacturing index. Both of those were weaker. And a 2-year auction that went off without a hitch. Your 2-year yield this morning, Manus, at 4.43%.
Yeah, how hungry are they going to be for the fives that come down the pike today, Danny? And as you say, it is about taking a chunk out of big tech. Don't forget, of course, we saw a part of this last week. And then on Monday, you saw this monty of dip buying, didn't we? Like, NVIDIA was down 9% last week. We saw a lovely rally on Monday. People said, OK, this offers us value. But here we are. It's not that Alphabet delivered such a paucity of results. They just didn't overwhelm to the extent that the market had been anticipating.
Right, because so many people have said that for the rotation to continue, you're going to need to see a change in fundamentals, not just sentiment. So is this the change in fundamentals that goes alongside sentiment? Because you and I talked for so long, that Pavlovian urge to keep buying the dip, that every single time that big tech sold off, you'd buy the dip. Barclays says to do it. But if there is a change in story, that the AI monetization isn't showing up, are you really willing to buy the dip this time?
And that's where there was a little bit of a wobble in the capex numbers within Alphabet. And it's not just Alphabet, but there's a capex within all of the Mag 7 in terms of the capex to monetization ratio. Mag 7 underperforms the Russell by 5% over the past 2 weeks, and yet the money flows into your favorite thing, the Russell 2000, and Julian Emanuel's favorite topic. But we'll get to that in a moment.
I'm really excited. Stick around for that conversation as well. Julian Emanuel from Evercore.
So let's just drill into the Tesla numbers there. They're getting smacked pre-market, along with pretty much the rest of tech after reporting yet another disappointing quarter.
I wanted to make some important changes that I think would improve the vehicle, the sort of the robo-taxi, the main thing that we're going to show, and we're also going to show off a couple of other things.
Let's get to RBC's Tom Narayan. He has an outperform rating on the stock at $227 a share. good to have you with us, Tom. So I don't know where to start here. If it wasn't for the regulatory credits at $890 million, the rest of it looks pretty darned awful reading to me. Margins poor, deliveries light, slippage on new models. Find for me a gem in here, or whether I should be looking at a continuation of the sell-off that I'm seeing this morning.
Yeah, I think you have to look at this stock in perspective, right? This is up, the stock's up 20% in less than a month on a delivery number, to your point, that was down year over year. Clearly, I guess the bright spot would be that sentiment is on their side. People want to be owners of this stock. But as you pointed out, a lot of what happened here was discounting. Because if you take the regulatory credits out, the margins, automotive gross margins ex credits was 14.6%. Consensus was expecting like a 16%. So a lot of discounting led that delivery number. But I do think people want to own the name. The robotaxi comments I thought were kind of high level in nature, but you're seeing folks take a closer look at it. There is some anticipation now on this October event. So I do think on a positive sign that robotaxi narrative that was previously looked at as kind of a science fiction project, now I do think people are giving it more credibility. That could be a positive, but still, this is very high-level nature.
Yeah, Tom, and I know you've pinned a lot of what you see in your estimation as Tesla's growth on that robotaxi narrative, and I know you've made some estimate changes there earlier in the year, but Elon Musk on the call said, if you believe Tesla will solve autonomy, you should buy Tesla stock. And all other questions are noise. Again, Tom, I know the robo-taxis are important for their growth, but are you concerned that Musk is just brushing off the rest of their business as, in his words, noise?
Yeah, I tend to agree with what you're getting to. I mean, it is an autonomy stock. The actual car business is less than 10% of my valuation, but you need the cars to get FSD on them to sell autonomy, So you want to have as many Teslas on the road to push FSD, and then later on this translates to robotaxi as regulators and consumers get trust in the technology. So I think he's right that autonomy is the future and it's the lion's share of the value, but you need the cars on the road in order to sell FSD and sell autonomy.
What is the timeline, Tom? I mean, there are many, many issues within Tesla. Slippage on every promise is pretty much high on the agenda. What is the distance between the delivery of a product like robotaxi, but more so the acceptance of it by us, by Danny picking up one, by me getting into a fully self-driving one and trusting it? Is that a short conversion, Damascene-like conversion moment for us in the world, or is it a long lead time and therefore we need to be a lot more patient?
I think it's the latter. It is a long lead time. It's not only the tech needs to be right, it's also the regulatory. You heard GM earlier yesterday, Mary Barra, CEO, comment about how difficult it has been with their purpose-built vehicle and actually abandoning that because they weren't able to get legislators to change a law to allow a car without steering wheels. It's a tough journey. It'll take a long time. But the thing to highlight here is it is going to happen. And when it happens, it'll be one of the most transformative things to happen in society. And I think when it does happen, all of us will be in these cars. In 50 years, we'll be looking back and be surprised that we used to drive these weaponized objects all around the highways. So it is going to happen, but it's not going to happen anytime soon.
Tom, I mean, that's the regulatory story in the future. I want to talk about regulatory in, let's say, a couple months' time, in November, when we know who's going to be the next president of the United States. For Tesla, we've been talking about it here, how their margins were okay because of regulatory credits. And that $7,500 credit from the IRA to buy an EV is a huge part and a driver in demand, which is otherwise weak. What happens to Tesla if it's a Trump presidency?
Yeah, and we heard his commentary, Elon's commentary yesterday on the call saying that if the IRA were to be removed, it would actually be a net positive for Tesla. I don't know if I agree with that. Maybe longer term in a weird way where other OEMs are taken out. It's a net negative, near term especially. Tesla produces a lot of batteries and it's going to produce a lot more in the US, gets IRA credits there. Pricing is the #1 obstacle for EV penetration, especially in the U.S. Those credits help get those cars out there. So yeah, if there were obstacles on the IRA, it would definitely be a negative for Tesla. That said, I do have to say, it's difficult to remove the IRA. First of all, a lot of these battery facilities are responsible for a lot of jobs, and they're in states like Ohio, Tennessee, Michigan, red statey, battleground state areas. A lot of this that you hear is a lot of bluster. If you remember in 2018, 2019, then President Trump talked about tariffs on Canada for aluminum and everything. And then a lot of these tariffs never actually happened. So a lot of these just may be political threats. At this point, the EV train is definitely going to happen. And the IRA is very difficult to just undo. It is law, and it's really hard to undo that.
I know we're going to get Ford's numbers yesterday. Mary Barra obviously has cut her dependence or her belief in EV. Set the table for Ford. Profits did well yesterday for Mary Barra. The stock did nicely. On Ford, where do they lean? How do they deliver?
Yeah, and I think for Ford, unfortunately, the quarter itself could be a challenge. I think estimates are a little bit high on their EBIT margin guidance, but what everyone's really focused is on the guidance for 2024. With GM, they had some problems with China, and I think that's why the stock sold off despite a beat and raise. Ford doesn't really have China exposure, so that's a positive. And the guidance suggests a big downshift in H2, so there could be something good if they raise. But it all comes down to their EV business, which is losing a lot of money. EVs were flattish quarter to quarter, so I don't anticipate anything amazing happening there. So we tend to be on the sidelines, I think, on this one, especially after you saw the sell-off hard of GM, now Tesla. Autos seems to be an unfavorable place to be. Pricing is coming down. It's a deflationary situation. That's not good for any of these guys.
Okay. Tom, thank you very much. RBC's Tom Narayan, really great to see you, and we'll keep track of that. Manis, a new column from Bill Dudley just out on Bloomberg now. Yeah, when the facts change, and this is basically what he said, when the facts change, so I've changed my mind. Of course, you're talking about when the Fed should cut. I've changed my mind. The Fed needs to cut rates now and not wait until September. So this is a punchy shift. Yes. Yes, Bill Dudley is someone who has argued for higher for longer. He goes through the reasonings. It comes down to this, Manis. It is a deterioration in the labor market that he's concerned about. He says, although it might already be too late to fend off a recession by cutting rates, dawdling now unnecessarily increases the risk. So it is a real risk in his estimation. And just look at some of the data that we had yesterday. Richmond Fed, the lowest since 2020. Existing home sales down by 5%. So again, the fissures are there. This is bouncing from the inflation narrative to the dual mandate, which is about employment and the strength of this economy. Right, and he lays out reasons why he thinks the Fed doesn't want to cut now. He says they want to build a consensus. They don't want to be fooled again, and they're not troubled by the labor market. It's that last point where he thinks that they should indeed be troubled by it. Yeah, and inflation pressures have abated significantly after a series of upside surprises. So there you go, the pivot to the dual mandate. Danny. Well, we're going to talk about the other pivot coming up, the rotation, buy into small cap weakness. That's according to Evercore's Julian Emanuel. He's going to join us next on your brief. This is your Bloomberg Brief. I'm Danny Berger, alongside Manis Cranny in New York. Manis, we were just discussing Bill Dudley's op-ed in Bloomberg Opinion. I just want to go over it again. Here is the main takeaway from it. He writes, the facts have changed, so I've changed my mind. The Fed should cut, preferably at next week's policy-making meeting. He goes on to say he's concerned about the labor market. It might be too late to stave off a recession, but they need to act now in order not to make it worse. Joining us now is Evercore's Julian Emanuel. Joining us. Thank you so much for getting up early for us. Great to see you, Julian.
Good to be here.
Look, this is an opinion that's starting to pick up some steam, that the Fed needs to cut. They should be cutting now, and they should be cutting in some size. Put that together with me for what the pillar that means for small caps. I know you've been calling for the rotation for some time. It happened. You definitely deserve a lot of credit for seeing that coming. But put these two stories together.
So actually, it's a bit counterintuitive, but hopefully it'll make sense in a moment. is that if you think about it, first off, the backdrop, Ed Hyman, who runs Evercore ISI, has basically been calling for inflation to cool for a year and a half now, more than people really expected, and that has certainly materialized. But the other part of that is the expectation that the historic tightening that we saw over the course of several years would in fact work its way through the system. So you are seeing, I think Bill Dudley is talking about the concept of long and variable lags, which is something that Ed has talked about for quite some time, really starting to hit. Where the intersection with small caps is, first of all, I mean, let's face it, small caps have been abandoned. They're like the child put in the corner.
So
Danny loves them.
I do love them.
Well, and actually, again, it is the time when an asset class has been abandoned as much as that, when it is trading at a valuation discount to history versus large caps and Nasdaq as it is, and when you have, in our view, policy behind you in an environment where even if we do have a downturn, it's likely to be a mild recession. That's an environment that we think is going to work, and we think the outperformance, and look, the drama of July's outperformance in small caps is really almost breathtaking. Obviously, the first couple of weeks was sort of to the good, and as the market has begun what we think is a broader correction at last week's high, you're still seeing that outperformance to the downside. But the thought is outperformance, and it's there, and we think it's durable.
I mean, you say very clearly the correction has begun in time and price, and on big caps, you're going to retest the 100-day moving average. But then if we look at this outperformance, just look at what happened yesterday in the tech sector, the big tech sector, on Alphabet, on Tesla, etc. Underwhelmed, and it's a perilous swipe at you. If these rate cuts look and feel as if they're going to come a little bit more quickly than we had originally anticipated, how much more flow will come into the Russell? Because we're seeing the flow pick up, we're seeing the price of the ETF pick up, and that flow, that momentum is there. So just describe the market flow for us.
Well, again, it is a very fine line, and we have to understand that because there are times, 2016 is a perfect example, where small caps outperform in a virtuous market cycle. We think it looks more like that, not coincidentally, an election year. And there are times, 2000, 2001, where small caps outperform because big cap tech underperforms. From our point of view, again, if you think about the liquidity backdrop, there is plenty of money on the sidelines to commit to both stocks and capital markets. And we think when this cycle is over, we are going to see a robust capital market cycle, M&As and IPOs. That's one of the reasons that the valuations here lead us to believe this is only a correction and not a market top. But again, the flow is probably a story that is going to go to the side. Probably till later in the year. Again, typically the time for market bottoms tends to be October. And I think given the volatility around this political cycle, you may see flows pull back a little bit for the time being.
Well, for the most part for this rotation, I know it varied a little bit last week. It has been small caps catching up. It's not necessarily been big caps selling off in a manner that would worry anyone. I wonder if yesterday changes that. And we don't have to talk about the individual stock, but just to lay it out, Alphabet, basically, their AI spend doesn't live up to what people had hoped. And this has been a large concern, that these hyperscalers have been spending a lot of money and that they need to show up with AI. Does the fact that some of these big companies, again, just one for now, don't have AI show that it might be different than it has been, that it actually might be the big cap techs taking a leg lower versus the rest catching up?
Well, the thing about AI, and actually this is a lot for those of us who are around, a lot like the introduction of computers to the desktop in the late 1980s and the early 1990s. The fact is that we as individuals have adopted AI into our own personal ecosystems to a greater extent than corporate America has yet. It doesn't mean it isn't going to happen. It just means it's happening a little slower than expected, and that time lag is basically what has been, in our view, over-discounted at this point.
Look, we talk about the political situation the past couple of weeks, and I like what you referred to, which was 1996. We had an assurity in 1996. This was Clinton versus Dole. It was so sure in the polls, and that's what we were building. We were all building that equity narrative around Trump and a GOP sweep. That narrative is challenged. That's the only word that I will use. I'm not here to make an opinion about it. It is challenged. How do you recalibrate on the new challenge?
Well, it's absolutely challenged. Look, again, if you go back...
You can have the opinion, we can't.
No, if you go back over the last year and a half, the public has been saying, whether you're a Democrat or Republican, that the one thing you didn't want to see was a Trump versus Biden rematch for whatever, and we don't have that right now. But the fact is that, and I think this has been misinterpreted by people, but this is a realism over 100 years of market history, is that unified government actually outperforms by 300 basis points per year over 100 years. And 2 weeks ago, coming out of that June 27th debate, there was a certainty about a red sweep.
Yeah.
And now that's certainly less so. And I think the straight line that the market climbed essentially since the April lows, it's part of the new political volatility, which is translating into technology stock volatility.
I just got to wonder, Julian, before we let you go, because we don't have that much time left, but as this election cycle goes on, we're going to get all these baskets that different banks are going to make and say, here are your Biden stocks, here are your Trump stocks, which I should say, a lot of those did not go as planned during the first presidency, where energy did not so well under Trump and did well under Biden. Should I be paying attention to those? Do we really understand the difference, the nuances of which stocks are going to outperform and which won't?
Well, again, this is varying degrees, and we have to write a new note calling them Harris stocks, by the way.
True, yes, good point.
We're still being presumptive. We're being presumptive about that. But in general, there are some differences, and I think the largest difference in what the market has been discounting was under a Trump administration and or a red sweep scenario, the regulatory environment is potentially likely to get more relaxed, which feeds into this idea of why financials had done so well in the last several weeks, because the thought is that M&A would, make a resurgence, and now that's something that is being retested again, as I said earlier. Ultimately, we think that cycle evolves under a Democratic administration or a Republican administration, but it's a different path to get there.
Well, one thing I think that we can all coalesce around is the fact that you're still going to have tariffs, you're going to have deficits, and you're going to have new rules on immigration. It's just a question of the scalability of those rules. Julian, thank you very much. Evercore's Julian Emanuel, our guest this morning on the markets. Coming up, the Israeli Prime Minister heads to Capitol Hill. More on the visit of Netanyahu to the United States of America. Good morning from New York.
It's your Bloomberg Brief with Danny Berger and Manus Cranny in New York. Let's set you up for your trading day on this Wednesday. We're going to get S&P U.S. PMIs out at 9:45 a.m. Eastern. Fed speak also comes from both Bowman and Logan at 4 p.m. Then earnings, IBM, Ford, Chipotle, all of them report after the market close. Plus, President Biden will be speaking at 8 p.m. from the Oval Office. Manus, it is his first address to the nation since stepping down from the ticket.
Yep, we're going to be all ears on that. Look, stocks that have dominated the past hour and will continue. Tesla extending its drop. The delay in the robo-taxi, I think, is one of the most prescient issues. Google extends its decline. The ad spending was good, but it was about AI. And Texas Instruments, Danny, extends its rally on the outlook, easing the fear of a chip slowdown.